Good afternoon, traders, and welcome to today's daily market review. It is Monday the 7th of September, and today we're going to be looking at the UK stock Debenhams. Now, since the 13th of October 2014 right up until the 26th of May 2015, Debenhams was trading in a clear and strong uptrend. Now, since May 2015, we've seen a decline in the price. As usual, the correction has taken the form of a AB equals CD correction. So what we're going to be looking to do is identify some Fibonacci price points where we expect prices to terminate. We'll then be looking for some kind of entry trigger into the trade, and then we'll be looking to buy into Debenhams and ride the trend back to the upside. So as usual, we're going to place our 5 factors onto the market, being momentum, pattern, price and time. And in terms of the market structure, we're going to be looking at some Elliott wave count. So in terms of momentum, we have both the weekly in the oversold zone, and on the daily we've seen a bullish reversal. So in terms of the weekly, we'll be expecting price to be trading sideways to up over the next few weeks, and as we've seen a bullish reversal on the daily time frame, we'll be expecting prices to be trading sideways to up over the next few days. Now, in terms of the price, we've identified 2 Fibonacci price zones. The first is at 72.278 at 71.29, and the second is 69.707 at 68.729. Now, ideally, we'd want to see the market enter into our second zone, which contains the 1.618 projection of the AB equals CD leg, and we'll be looking for a price reversal in and around this point. In saying that, if we were to get a moving average cross from this point, would still be considering the trade and buying into the upside. So 69.70 and 68.72.9 are our preferred zone. But again, if we were to get a trade trigger at this point of the 2 moving average crosses, we'll be looking to enter the trade. In terms of time, we're in the typical time zone for a correction. And in regards to the Elliott wave, obviously we've identified an AB equals CD pattern. So as usual, once the price enters into our time zones, our price zones, we'll be looking for a moving average cross to the upside. Now, the moving averages, you may notice, look very different to what they usually look like. This is because we've been provided with some fantastic tools by our friends over at globaltradingtools.com. Now, I recommend you all go over and take a look at the indicators that they provide. There's some very useful and powerful indicators for Ninja Trader. So globaltradingtools.com. I recommend you all go over there and take a look at what they have on offer. So on our 60-minute time frame, again, we'll be looking for a moving average cross of the 34 and the 8 moving average. As we can see here, the averages are still trading to the downside, which is represented by the red cloud. And once we get the fast moving average cross above the slow moving average, so the 8 cross above the 34, we would then see the color change to green. So it's just a more visual representation of our previous examples. So in terms of Debenhams, once the AB equals CD has terminated, which we're looking for 69.70 at 68.72, we'll be looking for a moving average cross of the 34 and the 8 on our 60-minute time frame, and then we'll be buying into the stock. Now, in terms of our targets, we're going to be looking at a first target of 91.10 and a second at 96.80. So 91.10 is our first target, and then 96.80 will be our second. Beyond this point, we'll be applying our usual 1.272 and 1.61 our external retracement of the entire AB equals CD pattern, and this will plot our final target, which sits outside the range of this pattern. So Debenhams, in a nutshell, we're expecting a reversal and a continuation of the uptrend, and we'll be looking to get out at our first two target points.